Hi everyone, Ted from LTM Elite Consulting. Today I'm going to discuss with you guys why we started the trading strategy platform. The thought behind it is that currently the S&P 500 is averaging somewhere around 5% year after year. So some good years, some bad years. That's where the 4% rule came from. The stock market is giving you 7%, the inflation, and then the rate of return. So, for people that have a small amount of money invested in the S&P 500, for example, let's say you have 100,000. 100,000 by no means is small, but you cannot retire with $100,000 because based on the numbers, usually you can withdraw somewhere between 3 and 5% a year. So if you have $100,000, let's say 5% gives you $5,000. $5,000 you divide it by 10, it's $500 a month. Give and take 12 months is, 400 and some change. So unless you have a retirement or a social security, 450, $500 a month, it's not enough to cover the difference. So the reason behind it for me to create a trading platform was that I know it's very difficult to outperform the market. So normally the S&P 500 or the total stock market averaging 7-8%, and I decided to give it a try as so many other financial investors are doing. There are account managers all over the country, as we know it, that their job is to outperform the market. And based on the numbers and the statistics, usually 90-95% of uh, individuals in the long run they fail rather than just investing in the market. So you might win 1 year or 2 years, but to have a track record, let's say of 15, 20 years, it makes it very difficult and challenging. So the reason I'm sharing with you guys this is based on my numbers that I had saved at my current age, I wasn't able to withdraw 4% because it's not enough from my investments. And that's when I started to trade more and I took a percentage from my total amount. So, for example, if I'm gaining on my 4% rule, if if I have $300,000 of my investments, 4% rule of that will be $12,000. But if I can take a small portion, let's say a third, so if I have $100,000 and I invest and I try to gain 30% a year, that makes it 130,000. So I can take the 30%, that's $30,000. So you see, that's why the trading strategy works if you can outperform the market, but it can backfire you if you cannot outperform the market and you can take some major risks in order to outperform it. So I'm going to show you guys here currently in my particular reasoning for positional trading. So positional trading is the strategy that I personally utilize. What is a positional trading? It's a type of trader who holds a position in an asset for a long period of time. The holding period may vary from several weeks to years. So in this particular case, further down in the videos, I show about some of the investments that I'm purchasing, like Apple and Google and Meta and Tesla from the past 5 months. Because I am concentrating on specific investments, I was able to outperform the S&P 500. And I can show you guys in my Empower portfolio here. As you can see here, this is the S&P 500 this year from January 1st to today's date, the 5/16/2023. The S&P 500 did 7.73%. My investments are at 32%. So right there, I outperformed by 25%. Does that mean that I'm going to continue to outperform? No. I can, it's only 5 months in the year so far. So I can make a couple of bad trades or a couple of bad investments, and instead of outperforming, I can go minus 30%. That's why positional trading, I'm not focusing on going in and out of the investments. Instead, I concentrate on where the markets are going in the next 3 to 5 months. And that's all I'm pretty much doing. Right here, going back, positional traders are by definition trend followers. Their core belief is that once a trend starts, it's likely to continue for some time. So the key takeaways: many traders end up losing money because they fail to make trades that meet their own criteria. As the saying goes, plan the trade and trade the plan. Success is impossible without discipline. A successful trader looks for and is attracted at a stock that moves a lot. That could happen for a number of different reasons, including earning report, investor sentiment, or even general economic or company news. And those are my main opportunities to gain right here: company news and even general events. So some type of event, general economic event is occurring, especially in 2022 and 23. It was great opportunities because there's so much volatility out there. And I've been talking about this on my YouTube channel a lot about opportunities while trading. Further down here, what to expect. I do not sell any courses, rather coach you on how I'm implementing my position trading strategies. So if you guys are interested, I can show you exactly what I'm doing, and that's why I charge a fee. I'm not a licensed financial advisor, so I cannot hold or manage anyone's stocks or give any stock pick advice, rather than just coach you guys what I'm doing with my investments. And then once the session is over, you guys can check with your financial advisors and make sure you do your due diligence. I will coach you how I spot a trend, make a buy based on that trend, and wait for it to peak in order to sell. I will coach you how I identify a profit and how I run until an exit signal based on my personal strategy when it's triggered. I will coach you on how I exchange traded funds, are ideal instruments for some trades. Some of my ETF position trading strategies, especially suitable like sector rotation and seasonal trends. I will coach you on some of my key factors that can affect tax returns while trading and how I use the opportunity to better manage taxes by optimizing profits tactically. So once again, I do not offer specific investment advice nor make any recommendation on what stocks to buy. Therefore, we will be focusing only on my personal strategies at my account. The majority of us were never taught how to handle finances. I'm adamant about handling personal finances, simplifying things, eliminating debt, and ignoring the noise are key. And then I have a couple of videos here explaining to you guys how important it is not to have any credit card debts and to have an emergency fund. So emergency fund and the credit card debt or any high interest loans are the key to eliminate before you go any further. That way you do not make decision based on fear or a must sell, rather than at peace and focusing on the key factors. And my fees are here. I charge an hourly fee, or if you wanted to do a 2 hours, you get a saving, or the 3 hour, you get a saving up to $250. So let me know if you guys are interested, because again, this is very simple, but in the same time, you need to be disciplined and have some key focus when it comes to trading. I would love to help you guys. And if you are more interested, you can send me an email, or you can call me, or you can, send a message through this video that is going to be in YouTube. Hope to connect soon. And remember, commend those who are rich in the present world not to be arrogant, nor to put their hope in wealth, which is so uncertain, but to put their hope in God, who richly provides us with everything for our enjoyment. Command them to do good, to be rich in good deeds, and to be generous and willing to share. 1 Timothy 6:17-18. Wish you guys the best. Till next time.